Hello and welcome. This discussion comes to you from the team at My Tax Accountant. And today we are tackling a massive topic, one of the biggest shakeups to the UK tax system in, well, a generation, the end of the non-dom regime. All right, let's dive right in. The big question is this. Are you a UK resident, but your permanent home, your domicile, is technically somewhere else in the world? If that's you, you're going to want to listen up because the rules that have probably shaped your financial life for years are about to change dramatically.
And here's the date you need to circle on your calendar, April 6th, 2025. After 200 years, the non-dom tax system is being completely scrapped. And look, this isn't just a little tweak. We're talking about a fundamental shift, moving away from that kind of tricky concept of domicile to something much more straightforward. How long have you actually been living in the UK?
So why the big change? Well, it really comes down to this number. The government projects this new system will bring in an extra £12.7 billion over the next 5 years. That's a huge figure, and it sends a really clear signal. The goal here is for people who live in the UK long-term to pay their taxes here just like everyone else.
Okay, so let's get into the details. First up, the non-dom era ends. To really get a grip on where we're heading, we've got to understand what we're saying goodbye to.
For the last 200 years, this is how it worked. If you are a non-dom, you could use something called the remittance basis. Now, what that means in plain English is this. Any money you made overseas, your foreign income and gains, was totally tax-free in the UK, as long as you didn't bring it into the country. It was a really powerful incentive, and honestly, it made the UK a huge magnet for international wealth.
And boy, was it popular. The number of people using non-dom status was actually on the rise, hitting 74,000 in the last tax year we have data for. So you see, this wasn't some dusty, obscure rulebook. It was a major feature of the UK's financial scene.
So what's the official reason for this huge shift? Well, the government says it's all about creating a fairer system. The idea is to move away from that complicated and, let's be honest, often debated idea of domicile and switch to a much simpler test. How long have you actually lived in the UK? Simple as that.
All right, so the old system is out. What's taking its place? Let's talk about your new destination, the Foreign Income and Gains Regime. We'll call it the FIG regime for short. And you can think of it as a pretty generous 4-year tax holiday for people who are new to the UK. So who actually gets to take advantage of this? Well, the rules are pretty strict. To get this 4-year window of 100% tax relief on your foreign income and gains, you have to tick 3 boxes. But honestly, the biggest hurdle, the real gatekeeper, is that you must have been living outside the UK for at least 10 years straight before you move here. Now, here's a really important little detail you have to know. This 4-year clock, it starts ticking the second you become a UK resident, and it does not pause for anything. So let's say you live here for a year, then you leave for 2 years, and then you come back. Guess what? You only have 1 year of this relief left. It's very much a use-it-or-lose-it deal within that first 4-year period.
Okay, let's make this real. Imagine Priya, a tech entrepreneur moving to London from Singapore. She's got about £200,000 a year coming in from her overseas investments. Because she's been living outside the UK for more than 10 years, that entire $200K is completely tax-free here for her first 4 years. And here's the real game changer compared to the old system. She can bring all of that money into the UK, spend it here, invest it here, whatever, and still pay 0 UK tax on it.
But as always with taxes, there's a trade-off. If you claim this fantastic FIG relief, you lose your standard personal tax-free allowances for that year. That's the personal allowance for income tax and the annual exemption for capital gains. So, if your foreign income isn't that high, it might actually make more sense to not claim the relief, keep your allowances, and just pay tax in the normal way. It's something you'll have to calculate each year to see what's best for you.
So that's the first 4 years, but what happens when the party's over? What happens after that 4-year holiday ends? This, right here, is why planning ahead is so important.
Well, once those 4 years are done, that's it. You become a regular UK taxpayer, just like anyone else who lives here. That means you'll pay UK tax on your worldwide income and gains, with income tax rates that can go all the way up to 45%. Let's go back to Priya for a second. In year 5, that £200,000 of foreign income is suddenly no longer tax-free. It's now fully taxable in the UK. And that could add over £80,000 to her annual tax bill just like that. That is a massive financial cliff edge that you absolutely have to be ready for.
Okay, so that covers new arrivals. But what if you're already here? What if you're living in the UK right now under the old non-dom rules? Well, the good news is the government has introduced a special toolkit of one-off reliefs to help you navigate the transition. Let's break those down.
The first and probably the most powerful tool in this kit is called the Temporary Repatriation Facility, or TRF. Think of it as a special, limited-time offer. It lets you bring money you've earned or gained in the past into the UK at a seriously discounted tax rate.
And just how low is that rate? It's just 12%. That's it. For 2 full tax years, from April 2025 to April 2027, you can bring those old funds into the UK and pay a flat 12% tax on them. I mean, compare that to a potential 45% income tax rate. It's a massive saving. But a heads up, the rate does go up after those 2 years, so there's definitely a reason to act quickly.
And here's a brilliant pro tip for you. You don't even have to physically move the money to the UK to get this deal. You can just designate the funds on your tax return, pay the 12% tax to lock in that amazing rate, and then you can bring the actual cash over whenever you want in the future. It's incredibly flexible.
Okay, on to the next tool in the kit. This one is all about capital gains, and it's a real game changer if you've been holding on to foreign assets for a while. It's called rebasing. Basically, it lets you reset the cost of your assets to whatever they were worth on April 5th, 2019. What that means is all the growth in value that happened before that date gets completely ignored for tax purposes. It's like it never happened.
And the impact here can be absolutely huge. Just look at this example. Without rebasing, the taxable gain on this asset is £1 million, but by using this rebasing relief, the taxable gain plummets to just £400,000. That's a tax saving of £120,000. It's just a massive, massive opportunity. Now, this sounds great, but you do have to qualify. You need to have used the old remittance bases in the past, and you must have owned the asset back on April 5th, 2019. It's not for everyone, which is why getting professional advice on this one is absolutely crucial.
Okay, let's touch on offshore trusts. This is where things can get really complicated. In the past, trusts were a common way for non-doms to protect their foreign assets from UK tax. But under these new rules, well, those protections are basically disappearing.
There is, however, a little bit of a silver lining, but it's a very small one. For the 2025-26 tax year, and only for that 1 year, there's a special 50% relief on foreign income coming out of these trusts. It is a very, very short window, so if you're a trust beneficiary, you need to be on this right away.
All right, let's move on to the final big piece of this puzzle, inheritance tax, or IHT. And the changes here are just as massive, and they will totally reshape how people with global assets plan for the long term.
And you'll spot a theme here. Just like with income tax, the big shift is moving away from that fuzzy concept of domicile and towards a clear, simple test based on residency. At the end of the day, what matters now is just how long you have lived in the UK.
So here's how the new rule, the 10-year test, works. For your first 9 years here, your non-UK assets are safe. But once you hit 10 years of UK residence, boom, your entire worldwide estate is potentially subject to UK inheritance tax. And you need to be aware of this tail period. Even after you leave the UK, you can still be caught in the IHT net for up to 10 years. It follows you.
And we're not talking about a small tax here. The UK inheritance tax rate is a whopping 40%. That's 40% on your worldwide assets above the thresholds. This makes estate planning and thinking about this stuff early more important than it has ever been.
Okay, wow, that was a lot to cover. So let's do a quick recap of the key takeaways. 1. The non-dom regime is gone from April 6, 2025. 2. New arrivals get a 4-year tax holiday on foreign income. 3. There's a 2-year window to bring old money back to the UK at just 12% tax. 4. You might be able to rebase your capital gains to save a bundle. And 5. Inheritance tax is now linked to a 10-year residency rule, putting your worldwide assets on the table.
So where does that leave us? Basically, the UK tax map for international people has been completely redrawn. This isn't just about moving a few borders, it's a whole new landscape. And with any new territory, there are huge opportunities, but also some serious risks. The time to get your strategy ready for this new world is, without a doubt, right now.
Look, navigating the new FIG regime, figuring out if you qualify for these one-off reliefs, understanding the new IHT rules, it's a lot. It's complicated. Getting professional advice that's tailored specifically to you isn't just a nice-to-have. It's absolutely essential.
The team here at My Tax Accountant is ready and waiting to help you make this transition as smooth as possible. You can get in touch with them directly using the details you see on the screen now. That's via WhatsApp, phone, or a quick email. And finally, if you want more clear, practical tax guidance just like this, please make sure you hit subscribe on the My Tax Accountant YouTube channel. Thanks so much for watching.